Welcome. Welcome to our inaugural Condo Rights Workshop of 2021. Condo Rights, for some of our newer viewers, is a monthly series where we bring panelists who can provide expertise and insights into topics of interest to our condo dwellers in South Florida. Our Manager Mischief workshop has been in the works for a while, and it's actually born out of a real-life event in our city of Sunny Isles Beach, where I currently serve as a commissioner. Detective Mitch Glansberg from our Sunny Isles Beach Police Department has been serving since 1985 as a police officer and 9 years in the city of Sunny Isles Beach as the lead investigator for financial crimes. So he has a very unique perspective and vantage point because he's really in the front lines of this particular arena and these issues. Our new condominium ombudsman, we are honored to have your presence, and we welcome you also aboard, Spencer Hennings. He's going to provide the regulatory perspective, what oversight exists from the Department of Business and Professional Regulation. Spencer Hennings has been appointed in July of 2020 by the governor, and he assists condominium unit owners mediating and resolving disputes in condominiums. He holds educational seminars, supervises and appoints monitors for condominium elections, and recommends policies regarding condominium law directly to the governor and the legislature. So also very important that we all circle around this important topic and see perhaps there are some policy implications on a going forward basis. First of all, I'd like to congratulate, let me admit a few more people, the fine detective work of our very own Mitch Glansberg, leading to the apprehension and arrest of a property manager this past year who was involved in a misappropriation of funds in condominium associations. While we can't really discuss in detail because this is an ongoing event, this case, the successful apprehension by the great work of Detective Glansberg really was the catalyst for this particular topic. And admittedly, these types of cases, they're somewhat rare, at least in terms of the successful arrest and prosecution of a condominium association manager. But as the saying goes, if it can happen here, it can happen anywhere. So in terms of financial impact, as we're all aware, millions and millions of dollars flow through our condominium associations. Condominium association managers and management firms are frontline workers in this, what I call the shadow economy. And they have direct financial responsibilities, and those are borne through the statute. So they control or disperse funds of the association, and that's actually through the DBPR, the licensure statute 468. So we're going to start with Detective Glansberg. Given your front row seat in condominium association issues affecting some of our condo dwellers, or actually, as the case may be, many of our condo dwellers, you're in a unique position to offer your perspectives and advice on this subject. So for today's topic, and from your experience, what are some best practices in identifying, reporting, and deterring condo manager mischief? Take it away.
Thank you, Commissioner. Good evening, everyone. I prepared a PowerPoint. I've got about 16 slides, and I kind of wanted to go through that, and it provides an overview of what I consider vulnerabilities and opportunities which create the issues that we have. So I'd like to just get right into the PowerPoint, and we can go through it, and if you like, at the end I can field some questions, or we can do that in another time, whatever we have time for today. Can you hear me okay?
Yes.
Okay. Okay, so give me just a moment. We'll get started. Double click. And then, where am I going?
You're already at the beginning, so go ahead and click that slide where it says at the beginning. Right here, move the mouse there.
From the beginning. Okay, can everyone see that?
Yes.
Can everybody see the PowerPoint?
Yes.
Yeah.
So as Commissioner Goldman alluded to, homeowners association are frequent targets of embezzlement fraud. It's a national problem. It's not just in Florida. It boils down to theft. Whether we call it embezzlement or theft or an organized scheme to defraud. My cases that Commissioner Goldman were speaking about, in the end, we charged the offenders with grand theft. That seems to be the most appropriate statute. And starting at the PowerPoint, we look at vulnerabilities, and we see now in all these buildings. There's a large sum of money that are moving through them. There's multiple accounts. And quite often where we have the problem is lax standards and enforcement. The other issue that seems to come up and came up in my recent cases, and it's very common throughout Florida, is we have part-time boards, they're volunteers, and they also often handle accounting and other controls. So that creates quite a vulnerability. So I'm going to go to the next slide. Another issue is kickbacks. And basically, I'm not going to read through this whole statute if everybody can just go through it on your own. And I'm going to go through the final slide regarding kickbacks. I'll give everyone a moment to look through it. Quite frankly, the bottom line with kickbacks is if an improper personal benefit is derived by a member of the board or even a subcontractor, it's a crime. So I believe all associations should have a no kickback policy. And, you know, it simplifies things. There's no and, if, or buts. It's just spelled out. And the things I present today, I believe are best practices. They don't cover everything. I'm not a lawyer. I'm not an accountant, but there's suggestions I give through the professional organizations I belong to and my experience. Now, to prosecute successfully these kickbacks, the statute requires that the recipient of the kickback receive an improper personal benefit. And that is in order to successfully prosecute the case. And we look at that when, you know, sometimes we'll get a call, I'll get a call from an association regarding that case, and we have to break it down to that to see if there's the ability for a successful prosecution. We might have some of the probable cause, but we might not have enough to successfully prosecute it. So bottom line, no kickback policy is the smart way to go for HOAs. Just to go over some statistics, the average embezzler steals $145,000. I can tell you in the two cases that I worked, one was near $200,000 and the other one is $400,000 and still climbing. So that's a lot of money for a building, especially a smaller building where that might be all the funds they have. 22% of COA embezzlers managed to steal over $1 million. You know, that's an awful lot of money, and it takes time to do something like that. So really the issue is nobody's paying attention. The embezzler can keep the scheme going for up to 18 months before caught. That seems to be, when I look at my two big cases, it was pretty spot on. In one of my cases, this was probably going on for over 2 years. There was just complete lack of internal controls. Smaller associations generally experience bigger losses than larger due to the lack of staffing and internal controls. They don't have the staff. You know, a lot of times there's no attention to the monthly cash flow because the people don't live there. The board members don't live there. They come in during the summer or they come in during the winter. So that's a real problem and a real consideration. The vast majority of embezzlers are first-time offenders. That's sometimes true. In my case, my two big cases, it was true. This particular person was a first-time offender. So we'll move on from this. Common warning signs of theft, they're not all proof. Balances exceed budgeted amounts. Multiple payments to a vendor that was supposed to be a one-time transaction. That's a red flag. Vendors' addresses on invoices that have PO boxes instead of street addresses. Vendors that have the same addresses as board members. That should be a big concern. The property manager that refuses to take time off always maintains control over the scheme. Well, what's the reason for that? So nobody else is looking at the books. And that was precisely the case in one of my two cases. Never, this particular property manager was there 7 days a week. So it's, you know, that person set this up. More warning signs, missing or misplaced condo documents, letters, bills, data, copies of files or bills instead of originals. There'd be no reason for that. Because you can alter an invoice. Why should you have a copy? You should look for original invoices. Delays in taking money to the bank. The reason why there's delays in taking money to the bank, I refer to my two cases, because the money was being embezzled. So there needs to be a normal banking routine, and somebody has to provide oversight to that. Somebody should be checking that property manager or that, you know, the person in charge of that. Duplicate payments on the same vendor, red flag. Number 11, the property manager becomes defensive when asked for an accounting report. That's textbook, and that's exactly what happened in one of my cases. This person was asked day in and day out, and months went by and months went by. And finally the board said, you know what, we need to go to the bank. So you and I are going to go to the bank, and there was hundreds of thousands of dollars missing. Number 12, services are paid but not performed. So what are they getting for their money? The property manager has a drug, drinking, or gambling problem. Definitely, you know, there should be, and you'll see that in the next slide, there should be some proper pre-employment assessments of these people before they're hired. The property manager controls all purchase receipts. Well, sometimes that happens, but is somebody looking over that? You know, is somebody checking? You just, you know, I'm not saying to distrust everyone. I'm just saying there needs to be proper internal controls where other people are checking on other people. Suggested best practices that limit opportunities to commit fraud. A third party, preferably an industry professional, should conduct proper background checks on all property manager candidates, like I said before. You know, somebody that's going to be responsible for handling hundreds of thousands of your dollars, you know, you're running a business, and there's nothing wrong with doing a proper background check. You know, that doesn't mean to suggest somebody that had a parking ticket or a speeding ticket 5 or 10 years ago is not going to be a good candidate, but they should be properly screened. Board members should be routinely and continuously inspect records and paperwork. You know, if it was my business, I'd be looking at the cash flows monthlies. There's a lot of money involved. There's a lot of accounts involved. There needs to be oversight. Hold the property manager accountable as you would the camera property manager, as you would for any manager directing and running a business. It's a business. Number 4, establish a culture of awareness, transparency, and accountability. You know, some of these buildings, they often change boards and property managers. And, you know, It's just the best practice. The knowledge that board members pay attention to accounting details should prevent most fraudsters from committing crimes, or at least limit the scale of fraud. It's, you know, when we look at police work, we look at the crime triangle. If the opportunity is taken out and you make it impossible for these people to steal from you, they're going to find someone else to steal from. It's really very basic. Talking about some basic accounting principles. The person authorized, and these are best practices, and these are suggested. They're not perfect, and not every one of them will be perfect, but you know, the industry professionals recommend these. The person authorized to sign checks should not be the same person in charge of verifying and gathering invoices. A different person altogether should check invoices against supplies received and services received. Employees who take in cash or money orders should not be the same person reconciling bank statements. Keep reserve accounts and operating accounts separate. Do not commingle these funds with each other. In one of my big cases, there were so many accounts in a small building, they didn't know whether they were coming or going. It's, you know, I just don't know that you need 5, 6, 7 operating accounts in a condominium association. I think you really, you have to get the professionals involved who are doing your accounting and try to limit the accounts. It's just a lot to manage. Number 5, bring in outside experts to train new board members to provide classes in accounting procedures and checks and balances. You see these new boards, and I get calls from these boards, everything's a mess. Maybe somebody needs to come in and do some training. It's just simple. It's like any other profession. Number 6, require at least 2 signatures on checks. Number 7, the person who prepares checks should not be the person who is authorized to sign them. It's a business concept that goes across any businesses. Update records with new signature cards following staff changes. Change account information immediately upon the staff change with no delay. Switch bookkeepers often. Sometimes, you know, some associations just don't want to spend the money. Rotate bookkeeping responsibilities prevents embezzlers from monopolizing control. Keep checks in a safe or locked with proper key management. Conduct periodic, unannounced audit. Very valuable. Consider a full audit after each CAM property manager change. Incredibly important and quite often very expensive for buildings. In one of my 2 cases, I just recently received a forensic audit from one of the buildings. It's probably 6 months after the arrest, but you know, the board knew the value of it and they went out and they spent the money, and it was many thousands of dollars, but it creates a rock solid case and a foundation for the new board. It was a new board who did this to say, we know where we're starting from. It's incredibly invaluable, incredibly valuable. 13, back up all computer records offsite utilizing the latest technology available, such as cloud computing. Absolute must. One of the buildings in Sunny Isles Beach had new board, new property manager, and alleged a lot of different types of fraud and had no records and still have no records. The records they alleged were wiped during the change of board members. So this would have solved that issue. Review the association's crime policy for appropriateness. The association should be named as the insured. It's certainly no fun to be ripped off for $200,000, $300,000, $400,000, but it's certainly important to have a crime insurance policy for that type of thing. The crime policy insurance amount should be sufficient to cover the maximum funds in custody of the association or management at any time. That might be very costly, but the more you can get, the better. I know that in one of my cases, probably the crime insurance policy covered more than half of the loss. And it was a great relief to the owners of the properties there, because they didn't know what their future held as far as special assessments and so on and so forth. Big issue. Pay special attention to the crime policy if special assessments are on the horizon, because the cash flows are going to go up. Spend $800,000 on, you're bringing in special assessments, your account balance is going to go up. It's just, it's bait for the embezzler. So pay special attention to that crime policy when you are going to start that special assessment, because you're dealing with a lot more money. So most of my research was taken from the Association of Certified Fraud Examiners Manual, which I'm also a member of. And Commissioner Goldman, if you'd like me to take some questions, or we can do it offline, or happy to, whatever you think might be the best.
Okay, well, thank you so much for such a thought out, such a thoughtful and impactful presentation. So many of these concepts really do rise to what we describe as best practices, and that's really the whole ethos for the condo rights workshop series, which is what are ways to better the governance, management, and operation of our condominium associations. One thing that jumps out to me in particular before we go to the chat is about kickbacks. So I've always been perplexed, because obviously we have a policy in place in the Condo Act because it is a problem, a challenge, and an issue. But the question always is about proof. So we all know, many people in this conversation, many of whom I know and I've known over the months and years, we understand that kickbacks exist. It's just, it exists. But what the conundrum here is how to prove it. How do you prove a kickback? We've vetted in the statute. We know it's against the law. It's criminal and so forth. What, in your experience, have you found as a way to actually prove it? Because it's a beneficial arrangement, right? So how do you prove it?
You know, I will tell you that in the many complaints I've gotten over the years, including before I became into the investigations unit, I was a patrol officer, and we would get calls about it. It falls back to where the evidence is, and a lot of times there's no evidence of it. So I would tell, boards to, if they're going to raise that concern, they need to have proper evidence. I don't know if that the context of what you're looking for. I will tell you that in the 11th Judicial Circuit in Miami-Dade County, we don't see that crime prosecuted often unless it's really egregious. I will tell you that. But if somebody feels that there's been a member that's getting kickbacks, they need to bring us into it and make sure there's evidence available, and we'll delve into it. We'll look for the criminal violation, which is.
So,
Commissioner, if I can, I'd just like to add on to that for a second.
Right, because we've talked about that, Spencer, where, my philosophy, and I think you share that, is the problem, or the main problem with kickbacks is that it's anti-competitive, right? That having kickbacks basically raises the prices of goods and services in our condo association. So Spencer, how do you feel about that? And how can we more effectively prosecute these cases or get proof or evidence?
Yeah, honestly, I think even the law might need to be changed on this, because in addition to everything that you've said, it's very, very hard to prove. And the people that are doing it are often taking a lot of time and energy to make it concealed. So in addition to that, what I want to get at is that the statute is a little vague on kickbacks and what actually is a kickback and what isn't a kickback. And, maybe someone still paid consideration, as lawyers would say, for remodeling of their unit, for example, but maybe it was much, much below market value. Then you have to, get into, was that proper or not? And that's very difficult to do. It's a gray area.
So do we get affidavits? Do we, there's just, we know it's bad. We know it's anti-competitive. We know it's wrong. We know it's criminal. We know all of that. And yet we really don't know how to effectively address it. I do like the great suggestion to have an anti-kickback policy in place that's has some value for deterrence, right? But I think the question really is, how do you prove it?